What if you screen junkies out there couldn't see the market for a week? Have a think about that. Hold that thought, we'll discuss that a bit later on. My name is Richard Lee and I manage the stockradar.com.au website for you. Stockradar runs a quant strategy based on high probability signals to create a trading edge. What do? I bring to the table 40 years of watching markets go up and down. I educated investors on fallacies and pitfalls, the overload of unnecessary bullshit we get fed. Our aim is to focus on what you need to do to take money out of the market consistently. The tool of choice I use is price analysis alone, with associated expertise in risk management, discipline, systems, behavioural analysis and trading models. That all combined to deliver a shortcut to understand the markets and what you need to do to turn a profit. If you let me, I will educate, teach and discuss with you how Stockradar can help guide you with your stock investments. Stockradar has a specific focus and objective and have built a solid trade plan and portfolio results around these necessities. All these issues are brought together in a unique trading centre which guides and leads you by example as to how we put it all together in real-time trading process. Okay, so let's just have a look at what we're going to go through today. Firstly, we go through our overseas markets. We look at the ASX 200, Stockradar portfolio, ASX stocks and trading tactics. What would happen if you couldn't see the market for a week? Okay, let's just go, we'll go into that one a bit later on. Okay, we've got some markets to get through now. So firstly, we're going to kick off with the Dow Jones. Okay, no real change, it's going up, still going up, there's nothing there, it's up above the average, the volume's been fine, momentum's okay, there's no signs of anything there at the moment apart from more buying than selling, and the Nasdaq is exactly the same, breaking high, extending this run further, momentum's fine, volume's great, all looks good. We looked at the other indices last week, which were also confirming what we just talked about then. Okay, copper, range trading, still stuck in its little range at the moment. Can't get out of it, so we'll wait and see what happens for that there. It's had a good rally this year. We'll go to Brent crude. We've seen some selling here. We've seen some fairly good, healthy debate here, buying and selling. We've got some slightly wider ranges occurring, but no real damage to the technicals. The selling here hasn't really damaged the price that much, so that's a good sign. So until that happens, we're not too concerned at the moment. We're worried that we're up around the R1 level, which is a long-term resistance level, but going back to 2018. But for the moment, it's still holding there, so we'll just watch that for the moment. And let that tell us what it's going to do. Gold, we're seeing a little bit of a recovery here. We don't want to shoot off too quickly, but we've had a little bit of breakthrough R1. We've got 3 challenge points that I've listed here. Challenge 1, which we've met and overcome. We've got a little bit of buying interest starting to come into gold at these lower prices. Whether it's just value buying or not, I don't really know. And momentum has gone back to the 0 level, so it's looking pretty good. But we've still got a couple of levels to get through here to really convince me it's going to rally. And 2,000 is the old high there for gold. Now, if we go and have a look at our gold price, we can also see that's levitating a bit. I mean, have added a couple of gold stocks over the last couple of weeks, and not many, but just a couple tentatively that have triggered buys. So that's a good sign. And we're seeing the Australian dollar gold price levitating a bit, a little bit of an extra bump by the weak Australian dollar, which doesn't look like it's going to strengthen in the near term. So that's going to be a bit of support for gold. So that's not a bad thing. And we look at the gold index itself. It's also, we can see a very good support area here. It's held that level. It's now starting to bounce through here. We're getting a bit of an idea that some support is coming through as it starts to break this downtrend line and move above the average. So early days yet, but the signs are that there may be a turn happening there. So we'll just wait and we just pick off the stocks as they come up. We picked off 2 so far. I'm going to have a look at one a bit later on for you to have a good look. Okay, so let's go now to the ASX 200, which again, similar pattern. As a matter of interest, I don't have the volume on this chart, but the last sell-off we did see here, there was some reasonably heavy volume, probably the heaviest volume we've seen for some time throughout this whole rally. So a little bit of concern there, but we're in this range here. The trend is holding okay. Momentum's still positive. It's above the average, so we give it the benefit of the doubt at the moment. But there's certainly a bit of a struggle going on. And what happened with CBA, one of our leading stocks yesterday, is an interesting situation. At what price do we want to keep paying for CBA's quality performance now. People are asking that question now, so interesting what happened yesterday. So the ASX 200 looks fine. It seems to be going up okay. The portfolio was up 2 this week to 74 stocks of 188 covered. There's 167 stocks I cover and 21 ETFs. The portfolios, our 5-stock portfolio is full. Our 10-stock portfolio is 9 out of 10. The conservative portfolio has picked up to 9 out of 20. So we've had a couple of big stocks come in here the last couple of weeks. So that's good. And sectors are property and internet are at the top. Banks have started to come off. We've seen Westpac fall out. The regionals have fallen out. Is CBA going to fall out this week? Well, we'll have a look at the chart a bit later on. Okay, building our portfolio, which we began in March, was sitting up at about 18% yesterday, which is pretty good. Again, we've managed to ride a bit of a wave since March, which has been a lucky situation. Portfolios don't always do that. They go through different stages. I'm going to talk a little bit about waves a bit later on. And our high conviction portfolio at the moment has Computershare, Car Sales, WiseTech, Inthertech, Pivot and Orica in there at the moment, of which WiseTech and CPU are the stars, which is, we always like to have a couple of stars, 1 or 2 in our portfolio, and they're doing very well for us. Okay, so let's get to some stocks now. I'm going to talk about waves and the ASX 200 a bit later on. We'll have a look at this because this move here has been a very good move, but I'm going to show you a better one soon, a bit later on. Okay, so to the stocks we go through. JB Hi-Fi, it's bounced as we've seen the last few weeks, but it's just gone sideways the last couple of weeks. No selling has really hit the stock, which is not a bad sign. But there's no great buying impetus to push it through here. So we are really in a bit of a stalemate with JB Hi-Fi that hasn't performed. It's been a perennially good performer. But for the moment, it's just gone sideways for nearly a year and a half now without much gain, and some pretty good news in there. So we just let that play out and wait for a break. Now, I want to talk a little bit about new highs, which I love. And as the market's been going up, we're getting lots of new highs. I know people are concerned about buying them, but I love momentum, and momentum is fantastic. And new highs tell me momentum's about to hit a stock. Not always, but more often than not. So I'm going to show you a couple now that we have looked at recently. Technology 1 is the first one that caps off the rank. It just keeps going higher and higher and higher. We've got the break here of a very good resistance level. We've got entered it here. It just keeps going up and up and up. So we just keep lifting our stop here because this is a fast move generating a good return. It's a power thrust move higher. And you can see here the volume's been very good and momentum has been excellent. So this is a good move. Where it ends, we don't know. We just follow it higher with our stop. ASX is just starting the move. As we know, it's just broken through this big resistance level for about a 3-year resistance level there. We've bought it back here. It's gone a little bit high at the moment. We don't know where it's going to finish, but demand stays strong, as we can see the volume down here and momentum down here and above the average. The 10 and 10th rating is 10. You have no choice. You don't know the outcome, but the probability say this is going to go higher. So that's where we stand on that position there. Okay, WiseTech is another one we can see. It's had a really good rally through here, just getting stronger and stronger with every day. Volume's been good, momentum's been good. It's well above the average, a long way from the average, so there's room to come back. But for the moment, we just follow this up with our stop loss and just lock in these profits that we're making quickly. The next one I want to show you is a slightly different one, and it has required a bit of patience on this one. And because we just never know when stocks are going to move. I can get a bit of a picture of what's going to happen with the probabilities, but actually the when is always difficult to know. So this one here, we've got a new high in Megaport. It was back in June of this year. Now we've had quite a few weeks here of sideways movement. We broke up here, patience. The stock's not going to do anything, and then finally we get the break up, and it runs from $18 to about $22 in 3 weeks. So although it was frustrating, our patience was rewarded, and we can see here the building strength and the volume here. We can see the momentum kicks higher. The momentum was already positive. All the signals were still positive all throughout this position here. It just went sideways, came back to the average, and then we saw a spike high. So Megaport is looking pretty good. So these new highs are fantastic things to buy because they tend to move fast. If we're wrong, we just hit our stop and we just get out. But at this stage we haven't been. Okay, now trend reversal I want to show you, and we've seen this one for a while. It's been a very good performer, this one. It's in the education area. We saw a trend reversal triggered back up here. We saw this building demand, steady selling through this area here until finally we got a break. Now, like, not exactly like Megaport, but again, a little bit different, is this had a break up here, and all of a sudden we're looking at this to go straight north. It doesn't. It comes back for about 5 or 6 weeks. Again, patience and commitment to your trade and conviction is what you really need in this situation, and it finally did get off its backside and start moving. So I've just got down here. This is what markets do. They challenge and test you all the time. I'm going to talk about getting too close to the market a bit later on in trading tactics. Don't get too close to the market. Stand back, see it for what it is, and there's no problem with this chart. It just took a little bit of time to get off its backside and move fast. But it's now had a very quick move from here's about $27. It's now up around $39. So it's moving pretty well and pretty fast. And again, we can see excellent volume and very powerful momentum in this. So it's been a great stock to follow. Really good stocks in here. Okay, now an ETF that we've looked at recently. With the ETF coverage that I do, I'm not licensed to give signals on ETFs. I might do that a bit later on, but for the moment, I just want to, in the trading centre, I just give you an eye of the trending status and where the major support levels is likely for a trend turn. Okay, so with ACDC, the battery tech and lithium ETF, we've just had a sideways trading action. So we've had a trend, we've had a consolidation, and now we're starting to break higher. We're seeing a bit of volume and a bit of momentum ticking up here. So we're now getting an idea that this may be starting to trend again. So this is what I'm just trying to give you an idea of when the trend is up, down, sideways. At the moment, it looks like this is up. Trend intensity rating is 9, and that's what you want to look at. Okay, so on the ETF side, that's what we do there. Okay, now a couple of other stocks I'm going to have a look at. Is Computershare. Okay, now Computershare has been one of our good runners of late. It's run very well since May, from about $14 to nearly $20. It's just come up to this R1 level here. So I guess the question is now, what do we do? And here's the old highs back here. So what do we do? We've got good profits to protect here, probably 30% or something like that. I'm not too sure. But now we are going to start tightening our stock because we're now hitting an R1 level. Give the market time to room to breathe, but also make sure you protect the profit you have. Now we've got some very good volumes pushing this stock. Momentum's very good, so this trend may well continue. But we just need to be careful and play the probabilities game, lift our stop, protect the profit we've got, just in case we do get stopped out. So it's time to tighten the stop on Computershare. Okay, now let's talk about CBA. Okay, CBA yesterday. Now it's still fresh in our minds as to what's happened here, but this is a real turnaround for CBA, and I think all of a sudden people are saying, well, what price do we pay for this quality stock? Because there are other stocks, other banks there, ANZ, NAB, also doing reasonably well at the moment. So we've made a new high here, and you can see this pattern here is a little bit reminiscent of what we saw on BHP. We saw it break higher, we saw this trading pattern here, then all of a sudden it turned around and dumped, and we know where that one's gone to now. We've got out of that well in time to preserve our profits there. But CBA, again, what we've got to do now is, this all looked very good and we were very happy, and we could have almost gone on holiday and forgotten about it, but we don't. We monitor it every week, which is what we should do. So this week, I'm going to be saying where this stock finishes in regard to my profit, in regard to my stop loss. Okay, if it's below the stop loss, I'll be out of this stock. I'll be locking in about 40% worth of profit this 12 months. And that's a good thing. So I don't know what's going to happen here with CBA. It all looked very, very good here, and all of a sudden it's changed, and that concerns me a little bit. So as to why that's happened, well, we're given reasons for it about the interest margins being closed up on CBA, but it's still a very good bank. So we're just going to watch this one for the moment. Trend intensity still rating at 8. We'll see where we finish. And so CBA is a little bit of a concern after what happened yesterday. That was a bit of an uncertain sell-off, so we'll keep an eye on that one. Okay, now I want to go to some of the miners. Some of the miners have been, they came off a bit recently, and we got stopped out of quite a few, like Oz Minerals, which is here. We got stopped out of this one. And we locked in a good profit here, but now the stock has come back down a bit, it's gone sideways, and now it's starting to go back up again. So I'm looking at other stocks like Linus, Independence, Orokraba, some of those stocks that have really have started to rally again, and they're all in that precarious position of whether they make a new high and we get triggered a new entry, or they fail again. So this is where Oz Minerals is here. and we're just watching this one here. Volume hasn't been huge here. Momentum is still positive. So if we did rally through here, we will get a positive signal on Oz Minerals, but we need to wait for the break, and I don't know what's going to happen. We're all very keen, but we all know lithium, we all know nickel, we all know these things are going to be in huge demand, even copper. So the run has had a lot to do with that. Now it's what's the next phase, which is what these markets are looking at. As to how big and how good it's going to be. So for Oz Minerals, we just stay stum on that one until we get a proper signal. Okay, NST is the one gold stock that I wanted to have a look at today. We have added a couple, as I say, recently. Northern Star now has, well, it's had a big correction. It had a huge run up here for a while. It then got to about $16, $17, and we've seen a fairly good big crunch down with the gold price sliding down. But it's come back into this area around about $9, $10. Okay, and found some very, very good support through here. Now we're seeing a bit of an increase in interest since we touched down through here. So I've set my trigger up here. This is the low point here. This is the trigger point. This is telling me that the selling pressure is easing. So the picture is turning, a bit like gold itself. The picture is turning. I need evidence that really tells me the trend is going. I'm not going to try and anticipate or get in too early. I'm going to wait until those probabilities are right in my favour. So I'm looking at Northern Star. Trend intensity rating is 6. The trigger point here is up around about 1150. So we've still got a way to go, but there is interest in these stocks at these levels, and this has come off a long way from $16 back to 8, so it nearly got cut in half with that last correction. So that's certainly one worth watching, NST. Okay, the last one to finish on, I always like to finish on a positive note, and Macquarie Bank was another one that, it broke higher, it stuttered about for a bit here, it broke higher here, we've got the signal here, the volume, the moving average, the MACD, it rallied a bit and then it came back, and for weeks it just hovered around here until finally we saw a jump about 25% to about $200 very, very quickly. Trend intensity rating is 9. So again, with this one here, we've got to raise our stop profit to lock this quick profit in, which has been very, very quick, very, very fast. But it was a bit of a slow one, so sometimes you just got to be patient when you get the break before these things happen. So Macquarie Bank looks good. No reason to think it's not going to continue higher at this point in time. Okay, so now I want to go to my trading tactics this week, and I often get the question, I'm a weekly trader, but what happens during the week? I ignore the weekly stuff because I ignore the intra-week stuff because it doesn't matter to me because I'm a weekly time frame holder. People say to me, what if the stock goes off during the week? Well, as I said, as you'll find out today, it doesn't always matter. So I'm going to go through this today, but what would happen if you switched yourself off from the market for a week? It will be interesting to see what happened. Okay, so let's just go through this process. What would happen if you couldn't see the market for a week? Apart from withdrawals from looking at the market, it's like an addiction, this sort of thing. Probably not a lot would affect you. But it might free up some of your time to do some other things instead of staring at the screen. Often, wild intra-week swings end up little changed by Friday once the tension's eased and day traders have exited. So we get very excited during the week with the ups and downs, and at the end of the week, we're often little changed. Or we might be, it depends. If the stock goes off, then it has changed, but if it's not, often this noise goes out of the market by the end of the week. So we thus focus on the perspective given by the weekly close. Okay, it's much more of an easy position to be into. So, screens, phones, the onslaught of persistent information overload and market tension distracts our trading focus and our ability to make the right decisions. Okay, and that's important because if we don't make the right decisions, we're going to lose money. Take a step back, ease the anxiety, take the pressure off and release the you and take back control, and it's much easier to do that looking at a weekly basis. If you need to trade short term, daily, hourly, then that's fine for you. For what I've done, I've been a short-term trader, I've worked for brokers and futures people, but now I'm back running my own account, I'm running many other super funds, and these people just want to take it easy and they don't want to be looking at screens all day. They just want to make a bit of money and do the thing properly. So that's what I'm trying to do with the weekly time frame, draw you out of that wild swing of the market and get you to sort of see things clearly. So often there's a serious mismatch between, so why do we go to daily and not weekly? Often there's a serious mismatch between what we want and what we can achieve. Okay, and the gap there is of expectations. We all expect and we always all want 20% a year or 30% a year. We can't do that. Some years it's going to be flat to down. Some years it's going to be good. We take the good with the bad. So we need to stay real honest and keep our perspective and our expectations in check. Mind that gap. Stock alerts that come out every day. They're warnings to you to say, I am aware that a 10 reversal or a stop level is being hit. Okay, but it's not a call to action until Friday's close. Why? Because 7 out of 10 stock alerts triggered during the week are not confirmed by Friday's close. So if I'm playing a numbers game and I get 7 out of 10 right and I got 3 out of 10 wrong, I'm going to stay with the 7 out of 10. Okay, so that means to you that every now and then I may get caught out in a stock that dumps during the week. Okay, but it will be triggered by the weekend, by the Friday's close anyway. So rather than get out on Wednesday, I'm going to get out on a Monday morning. Doesn't really matter too much because I'm going to also find that a lot of those stock alerts that go off during the week aren't triggered by Friday's close. Okay, daily whipsaw risk. You have that whipsaw risk if you trade weekly and look at daily. If you are trading weekly time frame, why would you look at daily? Okay, it's an urgency thing. Some people might want to do that, and that's fine. If they manage it properly, that's okay. Not for me. Stock market up or down next week? I don't know. We'll have to wait and see. Okay, what does it look at? By looking at the daily, looking at the charts all the time, it creates anxiety and a feeling you need to do something. If you're not there, if you're off surfing or playing golf or doing something else, some other hobby of yours, building your old car back together again, then your mind is relaxing and you're easing and you're enjoying yourself. And you're not staring at a screen wondering how much money you're making or losing all the time. If you don't look, you don't know. Okay, I've got the word Darvis here. I'm going to look at him a bit later on. He's a favourite author of mine, and I often read his book just to bring me back every now and then to say, oh gosh, what am I doing getting so close? I've got to stand back. Daily and weekly are very different time frames, dominated by very different types of traders. To do this, it can be disturbing at first because we're all used to looking at the charts and looking at prices all during the week. We don't have to do that. And take yourself back. It can be disturbing at first, but it requires a mindset change. Once you get comfortable with it and you behave automatically, it will become easy. Your anxiety will pass. Rarely have we suffered in 18 years by ignoring daily. Okay? So that's the important thing to note. So take a step back, relax, and enjoy your trading. Cool heads will make the cool decisions. Stay objective, keep your perspective and expectations in check. The weekly time frame is a great way to start. Switch the market and your mind off. And that's a really good thing to do, as we know, to give ourselves processing time. Give yourself a break. Okay, so that's really what I'm talking about today. The daily stuff is good, but we don't need to trade daily to be successful or good at what we do. And we've also got so much more time to do other things. Okay, now, Mr. Darvis. This is a book that my father gave me, and it's a pretty old, warm book. It's been read many times. When I was a lot younger, it was written in 1960, and it started me on a journey of which is where I'm at now. But this is Nicholas Darvis, just to let you know, for those who don't know who he is, Nicholas Darvis was a ballet dancer in the 60s. He's also an investor who travelled the world and got his stock information by cable, which was often late and delayed and whatever. But that's the way it was in those days, okay? He turned $10,000 into $2 million in 18 months by catching a wave. He developed his own simple box method of trading. He developed his own method of trading the market. He didn't have any computers around or anything like that. He just got cables with a few prices. So he used to chart those prices and use his box method. It's a very, very inspiring read. And it's a very good book to read, just to, as I say, to give you that perspective and just take you back to where you are. Now, one thing I wanted to show you before was I talk about waves. Now, waves don't always happen, but when they do happen, we want to catch them. So I just want to talk about the current wave we've got on the XJO, which is, as you can see here, we've really had a 50% rise from 4,800 to nearly 7,500, okay? Which has been a really, really powerful, good move. Caught a lot of people out down here who were not interested. But if we go right back here, right back to just after when I started, and you look at this move from here from 2003 to 2006. Now this move, for those of you who were around, was about 150%. Okay, this has only gone 50% so far. So this was a huge move. This is a wave. New highs everywhere, lots of money to be made, da 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 da. Then the GFC hit, and then that's another story. But what we've seen now is we're seeing another wave, but we don't know how far it's going to go, but we've got to capitalise on it. At some stage it will stop, of course. And then we have to respond accordingly. But these waves are very, very important things to catch. They don't occur all the time, but they're very useful when they do, because if you get onto them, that's why I never can predict what a market's going to do. All I do is follow what I'm doing, and even now we're making good money. You saw those new highs by WiseTech, ASX, Technology One, Megaport, IDP Education. All those stocks are making good money for them, and I don't know how far it's got to go, but I don't really care. All I know is I'm going to keep following it with my stop loss. Okay, so that really just gives you an idea, a little bit about the weekly thing. Nicholas Darvis, if you haven't read it. It's a great book. Okay, so just to finish off today, watching the market doesn't help. You won't make profits faster. In fact, the odds say you will actually lose money faster. Okay, it creates unnecessary angst in our life, in our minds, in our partners, all sorts of things. Just like a Greek siren, it tempts us to do things we shouldn't. And then we get cross with ourselves because we know we've made a mistake and we shouldn't have done it. And we've probably lost money. I'm not going to tell anyone what to do, but it's worth a try. There are many converts out there that have gone to weekly, that have been long-term subscribers of mine, who are now sitting back and relaxing and enjoying their trading a lot more than they used to be. I think after poring over charts, really we're trying to look for things that aren't there half the time. And that's quite a silly thing to do. So switch off for the week and see what you discover. Take a week off. See what you discover about yourself, your thought process, and your interaction with the market. That's going to be key. Okay, so look, that's all I've got today. Good luck for the trading week. Thanks for listening. I hope you've all learned something today, and I'll see you all next week. Okay, see you now.